Guys, good morning. August 12, 2019, Monday. Today we're going to focus on actually shorting the bounces in the market. So downward pressure resumes. We're seeing the most important observation between Friday action and pre-market today is the VIX divergence. We're going to take a look at that chart in just a second. Now, stocks are down on low volume, so do not expect a crash of any means. There's going to be intraday bounces, which we want to utilize to actually short the markets. Now, semiconductor stocks are down, despite of some good news from some of the companies that are reporting earnings. Overall, it is negatively impacting the tech sector, and the financial sector is getting hit hard again. So this creates a tough environment for a rally, especially when we combine this with a market crash in Argentina, Hong Kong unrest. We've got a bunch of negativity coming out from overseas. Overall, we're looking at Shopify, potential last day in this magnificent move higher in the stock of Shopify. AVGO chart is looking good. RSRPT continuing to buy puts on that, and BYD, we're looking for that drop to finally materialize this week. Here's the divergence that I want you guys to focus on. So on Friday, when the market dropped to 2,900, 2-3 times intraday, this is what was happening to the VIX. It was trading around the range of 19.4. You see this orange dot right here. Now today pre-market, when S&P futures fell to 2,900, the VIX was above 20. So you see, this is an indication that the market will continue to drop. And when we dipped all the way to 28.93 pre-market on the S&P futures, VIX actually shot up all the way to 20.31. Now, so far at the time I'm recording this, it's back to 19.6. So it's dropping, and this looks like a short-term formation that is actually bearish. However, with all the negativity in the market and with financials and technology sector dropping, I think it really makes a good case for the VIX to close above 20 going to the second part of the day. Now, that does not mean there's not going to be any intermediate intraday bounces in the market, but what we want to do is we actually want to short those bounces intraday. Now, August 12th pre-market, here's how the futures actually look. So this was the move 12 that we've gotten on a Friday, and all of a sudden, by the end of the day, when they hit that level of 29.31, 29.31 seems to be just this magic number, right? 29.31, as soon as we hit that number, they start dropping. It happened 3 times on a Friday, and if we get remotely close, I don't think we're going to get to 29.31 anymore today. I mean, we may get up at some point to 29.10, 29.15, but all those areas would be a good pop to actually come in and short, because the market is likely to retest that low that's set pre-market at 28.93. Not only that, look at this picture, guys, right here. Do you see this move lower here? Do you see this move lower here? I want you to focus on this red line going like this and this red line going like this. I want you to really mentally focus on this for just a second before I show you the next slide. You may be thinking, Leonardo, this looks just like this. Why would you be showing us the same slide over and over again? Well, it's because it's not the same slide. If you focus on the dates, on the second slide, this was actually August the 2nd, 8/2/2019. The slide I was just showing you pre-market for today earlier was actually August 12th, not the 2nd. So this is how the market looked on a 2-day sequence right before we got the bigger drop on a Monday. Now, clearly, I'm not saying that we're getting a bigger drop today like we did last Monday. That's not going to take place. But the setup is almost identical, which tells us that overall today we have a higher probability of a move lower rather than higher. So lower part of the trading tunnel, okay, the key support level that was established over the course of the last few weeks is kind of here, 28.85. So it would be reasonable to assume that if we get at some point during the day to a level of 28.93, we could easily actually break through that level that was established pre-market. We can easily visit this level of 28.85. Overall, what we're looking at is a move from what we're transitioning now, the upper part of the tunnel, the magic number of 29.31, all the way back to 28.60. Now, we may not be hitting 28.60, 28.60, 28.70 today, but we are possibly hitting that level tomorrow. So as you can see, after we hit that tunnel, the trading tunnel we've been talking about in the last couple of videos, that yellow line, we didn't really break above that, and we started moving lower. Now this move lower could pause. It could go, you know, with the intraday bounces. It may not basically get to 28.60 today at 28.70 today, but it is likely to get there tomorrow or the next day. So overall, for the next day, for today, for tomorrow, we're bearish. Not crazily bearish on the market, but we're expecting for this lower trading part of the tunnel to be revisited, after which we expect maybe this uptrend to get confirmed, expect some positive news to hit the market at some point this week. So still bearish on BYD. We've taken this chart, a look at that chart many times, so expect that move lower to finally materialize. And in the history of BYD, right, Monday is the day for BYD. So for those of you that did not buy BYD puts Friday, today is still not too late. AVGO chart looks just very good. What a good looking chart with this reverse candle that was formed on a Friday. I like this level. This candle is right against that blue line of 50-day. I think the stock is going to revisit the level right here, 267, possibly back to 260. So there's possibly a $20 move in the making lower on AVGO. Now, of course, with all the semiconductor stock dropping, it may not be opening at this 280 level. It may be opening at 278, 275. So that would still be a rather decent level to come in and short this thing. One stock that's been incredibly resilient despite of all odds, it should really be trading like Amazon, but this one just has been refusing to collapse or even go lower slightly, despite of the huge drop in the market. It keeps setting all-time highs. Now, notably, at this point, we have a clear divergency in Shopify between the RSI and the price action. So the price action hits all-time high. We did talk about this trade not so long ago, with the last couple of weeks saying that buy the dip and Shopify target the area of 360 or higher. So it's at 369 now. Could it move higher another $5-10 from here? Sure. But this divergence is telling us that the move lower will be coming in this thing. So if it goes to 375, 380, I am definitely pulling the trigger and I'm buying some puts on this thing. If it shows some weakness right at the open, I may just start stepping in and start collecting some of these puts right at the open. Not too many, because this one it's a bit of a crazy stock, right? So even if the market could be dropping again, it could have its last day higher, or maybe even a day higher today and a day higher in the morning. So you don't want to just, you know, all of a sudden buy as many of these puts as possible. You want to start buying a couple, add a couple of more tomorrow, because this move lower will ultimately happen in this thing over the course of the next week or two. So yesterday, not yesterday, but August 9th on Friday, it was a move 12. For those of you that are paying close attention to the 13 market moves, which you should, okay, review the move 12, guys. In the move 12, the market gaps down, then it moves lower throughout the day, hits the lows, and then it finishes roughly where it started. So this is kind of exactly the scenario that we have gotten. Now, overall, move 12s, they're sort of bullish. It's a green move because it's giving you a smiley face telling, hey, hold on, there's going to be no crash. But just because it's telling you that there is no crash, it does not mean that the market cannot go lower. Actually, move 12 is a highly repetitive move, so there's a probability of another move 12 today where the markets could go lower, but bounce at some point, but use these bounces to actually short it in this current environment based off the other conditions. So 2-day sequence is 7-12. This is how it looks on the chart. They're buying the dip. It looks like the market wants to move higher. It stalls. But at this point, we're collecting multiple tops here. Top 1 at this level of 29.40. Top 2, 29.31. Top 3, they're at 29.31. All of these stops, guys, they're happening right about that 29.31 level. So after that, we're heading lower pre-market. And I don't expect to move to 29.31. We're likely to visit the lower part of the trading tunnel before we get back up there. So 5-day sequence is 3, 7, 4, 7, 12. This is how it looks on the chart. And you can easily see the shift in the behavior from buying the dip, from the bargain hunters, to now we're stalling out at that top. And what's likely to happen, now this has not happened yet, but this is what we think is going to happen. The market is going to make another dip, kind of like this, and they're going to come in and buy this dip. So expect maybe midweek some Donald Trump tweets that could create this type of situation right here in which they're going to start picking up that dip. In this case, it would create the uptrend. Now, if we fiercely break below this 2860 level, then it could be big trouble for the market from there. Next market move, that's for today. We're expecting move 311 in a sense that the market is down. It could actually move higher at the open. We want to short that bounce in the expectation of a pyramid. The pyramid was not very pronounced on a Friday. It just happened really quick. The market just had a quick move higher and it started selling off. But the formation was basically that of the pyramid. So keep watching and trying to observe these pyramids. And what you want to do when you see a pyramid top, you want to get in, and that's where you want to pull the trigger on the put side. So VIX review, it is numerically high. It is on the uptrend, so it makes sense to buy puts right now, guys. We've gone over this chart, the divergency on the VIX, where, you know, when we're hitting certain levels on Friday, it was here. Pre-market on low volume, we're hitting these levels again, but yet the VIX is substantially higher than it was Friday. We don't want to play around with that situation on the call side. We want to acknowledge it and be ready for further downside. Clearly, you want to use the strategy of shorting the tops. You don't want to short the bottoms. If you take a closer look at a 5-day chart of the VIX, it looks like we're getting a pretty consistent move in the VIX every time it gets closer to the range of after it set a low of 16.82. If it gets closer to 17.5, it stops there. We got a bit of an uptrend going. If it reaches a level today of 19 to 20, that's going to be a solid uptrend. From there, who knows? We may be revisiting this level of 23. So be very careful here. The question of the day: will VIX close above 20? That would be actually very significant. Key takeaways for today: focus on buying puts on bounces. And number two, target lower part of the tunnel, this level of 2860 to 2871, to actually take profits, whether it's going to happen today or whether that level will be reached tomorrow or Wednesday. Guys, I would like to see everybody focus on these two things, make it happen, collect the profits, trade fearlessly. I'll catch you on the next trade tomorrow.